Hey, Joshua Phillips here with Churchill Mortgage. Today is September the 19th. It's Friday. We're starting to move into fall, and I hope you're having a great week so far and moving into a great weekend. Well, let's just jump right into it. So, of course, what are we going to talk about today? We're going to talk about the Fed cut. On Wednesday, the Fed cut the Fed fund rate 0.25%. Now, that was absolutely no surprise to anyone. There was like a 90-something% chance they were going to cut 0.25. Now, a few people thought maybe 0.5, but hey, we at least got a Fed cut. Now, if you've been following my videos for any amount of time, you already knew, hey, the Fed cut is not mortgage rates. It's something different. It's the overnight rate that banks charge each other. Number two, you also knew that last year when the Fed cut the Fed fund rate, started cutting the Fed fund rate, we actually saw mortgage rates go up. So I've been trying to say for the last few weeks to talk to people, let's just not assume that this is going to really mean anything for mortgage rates. In fact, I mean, the reality is mortgage rates have already come down about 0.75% over the last several months. So we have seen some improvement. So let's go to this headline right here. I often talk about the 10-year Treasury yield as an indicator of what mortgage rates are doing, very much related to it. Here's what the headline says today. 10-year Treasury yield hits 2-week high. We want it to go down despite Fed cut this week. So this is kind of what we were concerned about. Is we got the Fed cut, but Treasury yields, and we can pop up here. Let's go back here and let's look at the bond. All right, it's 4.129. And I think when the Fed cut on, initially when they cut on Wednesday, we actually saw the Fed fund rate drop to 3.99. We want the Fed fund rate going down. That means mortgage rates are probably coming down as well. But unfortunately, and you can kind of see here where we've kind of come from the last few months. You know, earlier this year we were at as high as 4.77. We've been kind of dipping. And got down to, there's that low, 3.994. But then what's happened is we've bounced up. Not what we wanted to see exactly. So let's pop over here to mortgage-backed securities. Now, really quick, this is a mortgage-backed security chart, which is what I typically always show. I always say a couple of things about it. Green is good, red is bad, and the higher the mortgage-backed security price, the better mortgage rates are doing. So we want to see the green. We want to see it going higher when it comes to these mortgage-backed security charts. I also like to say that every professional loan officer in America has this screen up all day, every day, and so I'm kind of sharing this information with you if you're watching this. So we can see we've kind of been we've been improving for sure. I mean, let's go back to a full year. And we've been, like, January is when we kind of hit the worst rates in the last year. And we've had a couple other spots where rates have kind of gone up. But for the most part, man, since about May, we've been seeing mortgage rates pretty much improve. But you can kind of tell here in the last couple weeks, let's just call it mostly September, we have kind of hit a little bit of a ceiling. We call that a ceiling of resistance. And yeah, all these little pokey where it's like trying to break through, but it can't. We call those wicks. These are Japanese candlesticks, and we've been coming up against that time and time again. Now, the good news is the red line here is the 25-day moving average. These are all moving averages. As long as we stay above that, we can still say we're bullish about mortgage rates improving. So, yeah, took a little bit of a breather this week. Mortgage rates got slightly worse over the last couple of days. That said, mortgage rates are still great. They are the best we've seen in at least a year, maybe almost, I've seen headlines say 3 years is the best we've seen mortgage rates. We're still in that range, but we have kind of, we've kind of gotten hit down just slightly. So all that to say, don't just assume. I mean, the Fed's probably going to cut again and maybe again 2 more times this year. Don't just assume that mortgage rates are going to go down. If they make sense for you right now, for instance, on a refinance, go ahead and pull the trigger and lock it in. You don't know anything about what mortgage rates are going to do the rest of this year, and they are at a great spot. At least that would be my advice. If you're looking to purchase, hey, we're seeing better interest rates. We're seeing rates, oftentimes it could be even in the fives with the right amount of closing costs, the right type of loan. We've seen clients getting rates even below 6%. So as I always say, if you want to talk about your specific situation and what rates be available to you, let's have a conversation and talk about that. And of course, we're certainly available if you want to work on getting pre-approved for a purchase, or if you want to start the process for refinance. Hey, have a great weekend. We're still in a great spot. So hey, let's take it. We're doing good, and but let's not take it for granted. See ya. Bye.